All right, let's dive into this one. You know, you've given us a real challenge with these excerpts from The Evaluation and Optimization of Trading Strategies, second edition.
Yeah.
By Robert Pardo, right?
Yeah.
It's a classic.
It is.
We're going to unpack some of the core ideas behind trading strategies.
Okay.
And whether you're, a seasoned trader
Right.
or just starting out, I think there's going to be something here for everyone.
Absolutely.
And I've got an expert here with me today who can kind of help us translate some of the more technical bits.
Wonderful.
I think this stuff can get pretty fascinating.
It is.
So you ready to dive in?
Absolutely. It's really amazing to see how much the trading landscape has changed since the book's first edition, back in 1991.
Yeah, back in the day.
Pardo himself points out some staggering numbers.
Okay.
We've seen a 1,000-fold increase in RAM, for instance.
Wow.
Global futures trading volume has skyrocketed over 1,400%.
Jeez.
And assets under management by commodity trading advisors have increased by over 1,600%.
Those are some huge numbers. It makes you wonder how anyone can even keep up in a market that's changing that fast.
It's a fast-moving market.
Yeah.
But here's the thing. While the tools and technology have evolved drastically, you know, the fundamental behavior of markets, they remain surprisingly consistent.
Right.
Human psychology is still driving a lot of market activity. And those underlying patterns, they haven't changed as much as you might think.
So even with all this fancy technology, all the algorithms, supercomputers, human behavior is still a major factor.
Absolutely.
That's kind of wild.
It is.
That leads to something that caught my eye in these excerpts.
The
whole discretionary versus systematic trading debate.
Right.
What does it actually mean to trade with a strategy?
That's a great question.
Yeah.
And something Pardo emphasizes throughout the book.
Yeah.
Every successful trader, whether they realize it or not, operates with some kind of strategy.
Right.
It's the framework.
That guides their decisions.
Right.
Now, discretionary trading is all about human judgment and intuition.
All right.
It's the Warren Buffett approach, where you rely on experience, research, and even a gut feeling to make decisions.
That sounds like it takes a lot of, confidence, a deep understanding of the markets.
It does.
Yeah.
Discretionary trading offers this incredible flexibility to adapt to unique situations and spot opportunities that an algorithm might miss.
Oh, interesting.
But, and this is a big BUT.
Okay, lay it on me.
It's also vulnerable to human emotions. Fear and greed can lead to impulsive decisions.
Makes sense.
And even something like fatigue can impact judgment.
Yeah.
So it's a double-edged sword, right?
Yeah, I see that.
The flexibility to adapt.
Right.
But also the risk of human error.
Human error, always there.
So, all right, what about systematic trading? This is where the algorithms really come in, right?
This is where the algorithms come in.
Okay.
Systematic trading is all about predefined rules. And algorithms often automated to execute trades based on specific criteria.
Okay.
So think high-frequency trading, where algorithms are making these split-second decisions based on market data.
Yeah.
This approach removes the emotional bias.
Right.
It brings consistency to trading.
Right.
Plus, systems can handle huge amounts of data, way more than any human could ever process.
Yeah.
So it's like having...
It's like having this tireless, emotionless trading machine.
Absolutely.
Yeah, working for you 24/7.
Exactly.
But, I mean, there are downsides, right?
Yeah.
To this, I mean, nothing's perfect.
No system is perfect.
Yeah.
One of the biggest challenges with systematic trading is that it relies on past data to predict future behavior.
Oh, right.
And as they say,
yeah,
past performance is not necessarily indicative of future results.
Right.
Unforeseen events, you know, black swan moments, these can throw even the most sophisticated algorithm off track.
Oh, yeah, for sure.
They can.
Yeah.
So you need to build a system that's robust enough to handle those unexpected events.
So how do you even go about creating a trading strategy? I mean, Pardo lays out some pretty specific steps, right?
He does.
In the book.
He does.
What are like the,
the core steps?
The absolute essentials,
Absolutely. The first is formulation and specification.
Okay.
This is where you take a trading idea, maybe something as simple as buy low, sell high, and turn it into a concrete set of rules.
Okay.
For example, he uses a moving average crossover strategy. Illustrate this.
Okay.
You have to define exactly what signals a buy or a sell.
Right. So
what specific moving averages you'll use, when to enter a trade, when to exit a trade.
Right. So it's got to be crystal clear.
Crystal clear.
No room for,
No vague hunches.
Yeah, vague hunches or gut feelings at this point.
Absolutely not.
Yeah.
Everything needs to be measurable and testable.
Got it.
And that leads us to the next step. Preliminary testing.
So this is where you really put your strategy through its paces.
Yes.
See if it actually holds up, right?
Absolutely.
I feel like Pardo has some interesting stories about what happens when people skip this step.
Oh, he does.
I bet.
He does.
Yeah.
There's this cautionary tale about this trader who nearly went bankrupt.
Oh, no.
Because they didn't properly test their strategy before putting real money on the line.
Yeah.
This step is all about making sure your system is functioning as intended.
Right.
Using tools like trade lists and charts to spot any red flags or any unexpected behaviors.
So it sounds like a healthy dose of skepticism is needed here.
Absolutely.
Yeah, don't just assume your strategy is perfect.
Right, you need to rigorously challenge your assumptions and look for those potential weaknesses.
Okay.
And once you've got a strategy that's performing well in this preliminary testing, then it's time for optimization.
Okay, optimization. This is where it gets a little intimidating for me, honestly.
I understand.
What does optimization actually involve?
It's actually not as complex as it sounds.
All right, good.
Optimization is about finding the best parameter values for your strategy.
Right. So
let's go back to that moving average crossover example.
Yeah, okay.
So we decided we're going to use moving averages.
Right.
But what length should those averages be?
Okay, yeah.
5 days, 10 days, 30 days.
Right.
Optimization helps us answer that question by systematically testing different parameter combinations to find the set that yields the best results.
So it's like fine-tuning your strategy for peak performance.
Exactly.
So what are some of the techniques? What do you actually do in this process?
So there are several methods Pardo discusses.
Okay.
One is a simple grid search.
Okay.
Where you test various combinations of parameters within defined range.
So you're just trying a bunch of different stuff.
It's a brute force approach,
yeah.
But it can be effective.
Right.
Then there's hill climbing, which uses algorithms to iteratively search for better performing parameter sets.
Okay.
And then for the more mathematically inclined, there are even genetic algorithms.
Oh, wow.
Inspired by biological evolution.
That's getting pretty fancy.
It can get very complex.
Yeah, but even with the best optimization, isn't there still this danger of overfitting your strategy to the past data?
Right.
I know Pardo dedicates a whole chapter to this, right?
He does.
To this whole concept.
He does, and for good reason.
Yeah.
Overfitting is a trap that even experienced traders can fall into.
Right.
It's when you tweak your strategy so precisely to past market data that it performs amazingly in backtests.
Okay.
But then it fails miserably in live trading.
So it's like you're creating this perfect strategy in a vacuum.
Exactly.
But it doesn't hold up.
Doesn't hold up in the real world.
Yeah, in the real world.
Right.
Yeah.
And it happens more often than you might think.
Really?
One reason is hindsight bias.
Okay.
We tend to look at past data and think, oh, I should have bought here, sold there.
Yep.
But in real-time trading, we don't have that luxury of hindsight.
You don't know what's going to happen.
Absolutely.
Yeah.
Another reason is simply focusing on profit maximization.
Okay.
Without considering risk.
Right.
So a strategy might look fantastic on paper, but if it involves taking on an unreasonable amount of risk, it's likely to blow up your account.
Oh.
Sooner or later.
So how do you avoid this overfitting trap? What are some warning signs?
Absolutely. One red flag is when a strategy relies heavily on a handful of extremely profitable trades.
Okay.
So it might look amazing overall.
Right.
But if those wins are outliers,
yeah,
and the majority of the trades are small, or even losing, that's a sign of potential overfitting.
So you got to look beyond the big wins.
Yes.
And really kind of scrutinize the overall consistency.
Absolutely.
Yeah. What else should traders watch out for?
Another red flag is a lack of a logical rationale behind your strategy's rules.
So you're saying...
If you're just adding rules based on what happened in the past without a clear understanding of why they should work, that's a recipe for overfitting.
It's like trying to predict the lottery numbers based on last week's draw.
Exactly.
Yeah, you might get lucky once.
You might.
But it's not a strategy for consistent success.
Right. The best trading strategies are grounded in these sound principles of market behavior. They're not just a collection of arbitrary rules cobbled together from past data.
So you need to understand the why behind your strategy.
The why.
Yeah.
Not just the what.
Not just the what. Yeah.
Exactly.
That makes sense.
No.
Now, speaking of market behavior, I'm curious about something that Pardo mentions. Market regimes.
Okay.
Is that just a fancy way of saying bull and bear markets?
It's a bit more nuanced than that.
Okay.
While bull and bear markets describe those broad upward or downward trends, market regimes refer to periods where specific market dynamics dominate.
Oh.
For example, you might have a low volatility regime where prices move within a tight range, or a high volatility regime where prices swing wildly. Recognizing these regimes and adapting your strategies accordingly is crucial.
So it's about understanding the current market environment.
Exactly.
And then kind of tailoring your approach.
Choosing a strategy that's well-suited.
Yeah, that makes sense.
To those conditions.
That kind of makes me think of something else Pardo talks about.
Right.
This idea of market efficiency.
Okay, yeah.
How does that impact trading strategies?
That's a great question.
Yeah.
And it's incredibly relevant in today's market.
Right.
Market efficiency basically refers to how quickly and accurately prices reflect all available information.
So in a highly efficient market, like we have now, it's got to be super difficult, right?
It's extremely difficult to consistently outperform the market by exploiting information asymmetries or predicting those future price movements.
So those, like, hidden gem stocks or whatever, they're pretty much...
They're few and far between these days.
They're gone.
Yes.
So the playing field's way more level now.
Much more level.
Yeah.
Thanks to technology and the widespread availability of information.
That makes sense. That's where the rocket scientists come in.
That is where the rocket scientists come in.
That is where the rocket scientists come in. That Pardo's talking about. The quants.
The quants.
The mathematical wizards.
Yeah, the mathematical wizards.
Trying to find an edge.
With all the complex algorithms and massive computing power.
Exactly.
So does that mean
human
traders are becoming obsolete?
That's a debate.
Yeah.
That's been raging for a while.
I bet.
Now, while quants have certainly changed the landscape, I believe there's still a place for human intuition and experience. Especially in navigating those unpredictable events or adapting to market shifts that fall outside the scope of algorithms.
Yeah, so it seems like the future of trading might be some kind of
hybrid approach.
Yeah.
Combining the best of both.
Right.
Human and machine intelligence.
Yeah, I love that idea.
It's a powerful combination.
Now let's shift gears a bit. Talk about performance evaluation.
Sure.
What are the key metrics that traders should be focused on? Well, one of the most fundamental is net profit, right?
Yeah, of course.
That's the bottom line.
A bottom line.
But as Pardo emphasizes, profit alone doesn't tell the whole story.
Right.
You also need to consider risk.
Risk.
Yeah.
Okay.
Yeah.
So it's not just about making money.
Right.
It's about...
It's how much risk.
How much risk you're taking.
You're taking on.
To make that money.
To achieve those profits.
Right.
Exactly. And one of the key risk metrics is maximum drawdown.
All right. What's that?
Which represents the largest peak-to-valley decline in trading equity during a specific period.
So it's basically measuring the worst-case scenario.
It is.
Like how much you could potentially lose.
Precisely.
Okay.
Understanding your maximum drawdown is crucial for managing risk.
Right.
It helps you determine how much capital you need to withstand those inevitable periods of loss.
Yeah. You got to be prepared for those losing streaks. It can also help you, kind of gauge your own risk tolerance, too.
Oh,
right?
Absolutely.
Like how much of a drawdown.
How much can you stomach?
Yeah, can you stomach?
Right.
Yeah, before you start,
you
know, questioning your strategy.
Absolutely.
Or even worse, making like impulsive decisions.
Impulsive emotional decisions.
Yeah, that makes a lot of sense.
Yeah.
It's about having that
right.
Psychological preparedness.
Psychological preparedness.
Yeah.
Yeah.
For when things inevitably go a little south.
When things go south.
Right.
Yes.
But beyond just profit and risk. Are there other metrics that can provide
yes,
a little bit of a deeper insight?
Absolutely.
Into a strategy's performance?
Absolutely. Pardo introduces this concept of risk-adjusted return.
Okay.
Which considers both profit
and risk.
Right.
To provide a more comprehensive view of a strategy's effectiveness.
So it's kind of putting those two together.
It is.
To get a more holistic picture.
A more holistic picture, yeah.
One popular metric is the Sharpe ratio.
Okay, what's
which compares the strategy's return to a risk-free investment, like a government bond.
Okay, yeah.
So it's essentially measuring how much additional return you're getting for taking on that extra risk.
For taking on that risk, yeah.
A higher Sharpe ratio suggests that you're being well compensated for the risk you're taking on.
Gotcha.
It's a handy tool for comparing different strategies.
Different strategies.
And seeing which one offers the best balance of risk and reward.
Oh, that's really helpful.
It is.
Now, I know we touched on overfitting, but is there anything else that stands out to you? As particularly insightful or important concept when it comes to evaluating a trading strategy?
Absolutely. One thing that really resonated with me is Pardo's emphasis on the importance of monitoring real-time performance and adapting strategies as market conditions change. He points out that even the most rigorously tested strategies can become less effective over time as market dynamics shift.
So it's not a
set it and forget it.
Set it and forget it kind of thing. You got to stay, vigilant.
You need to stay vigilant and be prepared to adjust course.
Adjust course if you need to.
As needed.
That's right.
Exactly. And Pardo provides this practical guidance on how to monitor those key performance metrics. Like return on investment, maximum risk, and the comparison of real-time results to historical testing data.
It makes me think of those traders who just stubbornly cling to a failing strategy, hoping it'll just magically turn around.
They do.
But it sounds like recognizing when a strategy needs tweaking or even abandoning is really crucial.
Absolutely. It's about having that humility to acknowledge when a strategy is no longer working. And the discipline to make those tough decisions. Even if it means abandoning a strategy that you spent a lot of time developing. And speaking of discipline, that brings us to one of the most critical aspects of trading. Managing risk.
Okay, let's talk about that. How do you protect your capital when things inevitably go wrong?
That's a great question. So Pardo emphasizes the importance of setting clear risk limits, both for individual trades and for your overall portfolio. This helps to control those potential losses. And it prevents you from making those emotional decisions.
So you're not just,
when things get heated.
When things get heated, you're not just panicking. Throwing all caution to the wind.
Exactly.
So it's about knowing your limits.
And
sticking to them no matter what. Even when it's tough. Another essential element is diversification. Spreading your risk across different markets and asset classes. So this helps to cushion the blow if one particular market or strategy goes against you. It's like that old saying, don't put all your eggs in one basket. You got to spread things out.
Spread them out.
But I imagine even with those safeguards, the psychological side of risk management can be really tough, right?
It can be very challenging.
How do traders actually maintain their composure when they're facing potential losses?
That's where having a well-defined trading plan and understanding your risk tolerance comes in.
So it's about
having the mental fortitude.
The mental fortitude.
To stick to your plan.
To stick to the plan even when
faced with setbacks. And challenges.
It's easy to get caught up, right?
Absolutely.
In the excitement of a winning streak? Or the panic of a losing streak. But you got to stay
grounded.
Grounded,
Exactly. Trading's a marathon.
It is.
not a sprint.
That's right.
It's about making those consistent, well-informed decisions over time.
Over time.
Not chasing those quick profits or letting emotions dictate your actions.
It's so easy to do that, though.
It is.
And speaking of managing emotions, let's talk about the practical side of risk management, right?
Sure.
Like, what specific advice does Pardo give for protecting your capital?
He stresses the importance of setting those clear risk limits.
Okay, so we're back to that.
We're back to that.
Having those boundaries.
For both individual trades and your overall portfolio.
And the overall portfolio.
Right. This helps to control those potential losses.
Okay.
And prevents those emotional knee-jerk reactions.
So you're not reacting.
When the market moves against you.
Emotionally, you're like, oh, shoot.
Exactly.
And then suddenly you're making all these bad decisions.
You're making those emotional decisions.
Yeah, so it's about having those boundaries in place beforehand.
Absolutely.
Knowing when to walk away.
When to walk away.
From a trade.
From a trade.
Even if it's painful.
Even if it's painful.
Yeah, because sometimes it is, right?
Absolutely.
You're like, oh, I don't want to sell now, but
It's tough. Another essential element is diversification.
Diversification. Okay.
We're back to that.
We're back to that. Spreading the risk.
Spreading your risk.
Across different markets, different asset classes.
Different asset classes.
It can help if
one particular trade or market
goes south.
Right?
Yeah.
Yeah, don't put all your eggs in one basket.
Don't put all your eggs in one basket.
Exactly.
Right, but even with the risk limits.
All right.
Even with the diversification.
Yeah.
I imagine the psychological side of risk management can still be really tough.
It is a challenge.
Right.
It is.
Like, how do you actually stay calm when you're facing those potential losses?
Right.
That's
where having that well-defined trading plan.
Okay, so we're back to the trading plan.
And understanding your risk tolerance comes in.
So it's about
having that discipline.
To stick to your plan.
Yeah, to stick to the plan, even when you're feeling the pressure.
Even when you're feeling the pressure.
Right.
Right?
Yeah.
And this is where the concept of stop-loss orders
stop-loss orders
comes in. Yeah. Pardo describes them as a vital tool for damage control.
Damage control, okay.
Right.
So it's like having an emergency brake on your trading, right?
Exactly.
Like an emergency brake.
You can just automatically
get out of a trade.
Get out of a trade. If it hits
a certain
predetermined loss level.
All right, if on a predetermined level.
Exactly. Stop-loss orders can help you take the emotion out of the equation.
Oh, okay. Expert speaker.
It can help you take the emotion out of the equation and ensure you exit a trade before those losses get out of hand.
That sounds like a valuable safety net.
It is.
Especially for those moments when fear or greed might be clouding your judgment.
Right, exactly.
Now, as we wrap up this part of our deep dive, is there anything else that kind of stands out to you as particularly insightful?
One thing that really stood out to me is how Pardo dedicates a whole chapter to this concept of overfitting.
Yeah, overfitting.
It's this common trap that traders fall into.
Yeah.
Even those with years of experience.
Right.
And he highlights how easy it is to trick yourself
into believing you have this winning strategy, when in reality, it's just a product of fitting your system too tightly to past data.
It's like that old saying, past performance is not indicative of future results.
Exactly.
Right. But how can you actually tell if you've fallen into that trap?
Right.
Like, are there warning signs to look out for?
Absolutely.
Okay.
One warning sign is when a strategy depends heavily on a small number of incredibly profitable trades.
So like a few big wins.
It's like hitting the lottery a few times.
Right.
Thinking you cracked the code.
Yeah, you think you figured it out.
But those outliers might be masking weaknesses that will eventually surface in live trading.
So you've got to look beyond those big wins and really examine the overall consistency.
Yes.
What else should traders be on the lookout for?
Another red flag is a lack of sound reasoning behind a strategy's rules.
Okay.
If you're just adding rules based on what happened in the past.
Without understanding why they should work.
Right.
You're essentially chasing ghosts.
It's like, yeah.
You are.
You're just looking at random patterns.
It is.
That may or may not.
Repeat.
Right.
Right.
Yeah.
Pardo emphasizes that the best trading strategies are rooted in sound principles of market behavior. They're not just random patterns from the past.
So it's about understanding those forces
that
are actually driving the market.
Absolutely.
Yeah, not just trying to
exploit
the randomness.
The randomness.
Right. Okay, that makes sense.
Now let's talk about market efficiency.
Market efficiency, all right.
It's a concept that has a huge impact on trading strategies.
Okay.
Market efficiency refers to how quickly prices adjust to reflect all available information in an efficient market.
Yeah.
Like the one we have today.
Right.
It's very difficult.
Yeah. To consistently beat the market because information spreads so rapidly.
So, like, the days of finding
those
hidden gems. Or undervalued stocks. Pretty much over. They're definitely harder to come by.
So much harder.
The widespread availability of information and these sophisticated trading algorithms have made markets incredibly efficient.
That makes sense. That makes me think of the rocket scientist Pardo talks about.
Yes.
You're using...
Yes, the quants.
The quants, right?
The quants.
All the, the advanced math and all the models.
The complex algorithms.
To try to find an edge.
Yeah.
It sounds like the competition is fierce.
It is. Their emergence has really changed the trading landscape.
For sure.
They're really pushing the boundaries of what's possible with these complex algorithms and massive computing power.
Yeah, searching for tiny
inefficiencies.
Those tiny inefficiencies.
They can exploit.
Yeah,
so does that mean that human traders are becoming obsolete?
That's a great question.
Yeah, it's the question on everyone's mind. Right.
It is something that a lot of people are wondering about.
Yeah.
And while the rise of quants has definitely challenged the traditional approaches, I believe human intuition and experience still have a valuable role to play.
Right, because
humans are better at adapting.
Humans can adapt
to those unpredictable events, or navigating situations that fall outside the scope of an algorithm.
Right?
Yeah. So
it seems like the future of trading might involve
some kind of a hybrid approach. Combining
the best.
The best of both.
Yeah.
Human and machine intelligence.
It's a powerful idea.
It is a powerful combination.
Now, shifting gears a bit.
Okay.
Let's talk about performance evaluation.
Sure.
What are some of the key metrics?
So, of course, net profit is crucial.
Yeah, net profit, it's the bottom line.
It's the bottom line, right.
Yeah.
But as Pardo emphasizes, profit alone doesn't tell a whole story.
Okay.
You also
got to look at the risk.
Need to consider risk.
Right? It's not just about making money.
Right.
It's about how much risk you're taking.
It's how much risk you're taking on.
To make that money.
To achieve those profits.
Yeah, for sure.
Exactly.
All right.
One of the most important risk metrics is maximum drawdown.
Maximum drawdown. Okay, so what is that?
It shows the biggest peak to valley decline in your trading account over a specific period.
So you're basically measuring like the worst case scenario.
Essentially, yes.
Like how much you could potentially lose. During a rough patch.
Exactly.
Yeah. Understanding
I gotta know
your maximum drawdown.
What you can handle.
Is crucial for managing risk.
Yeah.
It helps you determine how much capital you need
to have
to withstand those inevitable losing streaks.
Right.
And make sure you don't wipe out your account.
It's like knowing your pain tolerance.
Exactly.
Before you go on like a really challenging hike or something.
Right.
You need to know.
You need to know what you can handle.
Yeah, what you can handle.
And beyond just profit and risk, we have the concept of risk-adjusted return.
Okay, so this is combining...
It combines those two factors.
Putting the profit and the risk together.
Right.
Okay.
One popular metric for this is the Sharpe ratio.
Sharpe-free ratio.
Which compares your strategy's returns to a risk-free investment.
Like a government bond.
Okay.
So it's measuring how much extra return you're getting for taking on that additional risk.
Okay.
A higher Sharpe ratio.
So a higher Sharpe ratio means
you're getting more bang for your buck. So to speak.
Yeah.
It's a good way to compare different strategies and see which one
offers the best.
Offers that best balance of risk and reward.
That's a handy tool to have.
It is a very useful tool.
Now, beyond these metrics,
right?
Is there anything else that traders should be kind of paying attention to?
Pardo stresses the importance of looking at the consistency of a strategy's performance over time.
Yeah.
It's not enough to just look at the overall profit.
Profit, right?
You need to see.
You need to see how steady it is.
How steadily the strategy generates those profits.
Right. Are there any kind of
any
weird patterns or swings?
Concerning patterns or wild swings?
Yeah.
Exactly.
So you want a strategy that delivers those reliable results.
Reliable results.
Yeah.
Not one prone to booms and busts.
Right.
Exactly.
Right.
One way to assess consistency is to look at the distribution of your trades.
Okay.
The average win size.
Okay.
The average loss size. The percentage of winning trades.
So you're getting a really deep...
You're getting a deeper understanding.
Understanding of the strategy's behavior.
Of the strategy's behavior.
Not just the
top-line number.
The top-level numbers.
Right.
Now, I know this might sound a bit theoretical.
Okay.
But Pardo also suggests comparing your strategy's performance to a benchmark.
A benchmark. Okay.
Like perfect profit.
Okay, perfect profit. What's that?
So perfect profit represents the maximum profit you could achieve if you bought at the absolute lowest price and sold at the absolute highest price.
During a specific period.
Right.
It's obviously impossible.
You can't time the market perfectly.
You cannot time the market perfectly.
Yeah.
But it serves as a useful benchmark.
So it's like a reminder.
It's a reminder.
That even the best strategies are limited.
Are limited by the inherent unpredictability.
Yeah.
Of the market.
Right.
You can't time every peak.
You can't time it perfectly.
And valley perfectly.
Yeah.
Now let's talk about...
Now, speaking of...
The mental game.
The mental game of trading.
Of trading.
Because putting a strategy into action can be a real emotional roller coaster.
It can be.
Right.
Yeah.
You're up, you're down.
Absolutely.
You're excited, you're scared.
It's a roller coaster.
What advice does Pardo have?
Yeah, Pardo really stresses the importance of having that well-defined trading plan.
Okay, so we're back to the trading plan.
And sticking to it.
Sticking to it.
No matter what emotions are swirling around.
So you're not making decisions.
You're not letting those emotions...
Based on emotion.
Dictate your actions.
Right.
He also highlights the importance of understanding your risk tolerance.
Okay, so knowing
how much risk...
How much you can handle.
You can handle.
Yeah.
And being mentally prepared.
Being mentally prepared.
For those inevitable losing streaks.
It's easy to get caught up in the excitement, right?
It is.
Of a winning streak or the panic of a losing streak.
It is easy.
You got to stay grounded.
You got to stay grounded.
Right.
Right.
Yeah, you got to keep your head on straight.
Trading is a marathon, not a sprint.
Trading is a marathon.
It's about making those consistent, well-informed decisions over time.
Not chasing.
Yeah, you can't just chase.
Those quick profits.
Quick profits.
Or letting emotion.
You can't let emotions
dictate your actions.
Yeah. It's tough, though, because...
It is.
You know, you're dealing with real money.
Real money. It's easy to get emotional.
And speaking of managing emotions, let's dive into that practical side.
The practical management.
Right. What advice does Pardo have for protecting your capital?
Right.
Making sure you don't just blow up your trading account.
So he stresses the importance. Setting those clear risk limits.
So we're back to that again.
We're back to setting those boundaries.
Having those boundaries.
For both individual trades.
For each trade.
And your overall portfolio.
For the whole portfolio.
Right. This helps to control potential losses.
Right.
And prevents those emotional knee-jerk reactions.
So you're not just reacting emotionally.
When the market moves against you.
Oh, man.
Exactly.
You know, and making all these bad decisions.
You're not making those emotional decisions.
Right. So it's about having
those boundaries.
Having those boundaries in place beforehand.
Beforehand. Knowing when to walk away.
When to walk away from a trade.
From a trade. Yeah.
Even if it's painful.
Even if it's painful, yeah.
Absolutely.
Because sometimes it is, right?
It is.
You're like, no, I don't want to sell now, but...
It's tough.
Yeah.
Another essential element is diversification.
Diversification.
Spreading your risk.
We're back to that. Spreading the risk.
Across different markets.
Different markets, different asset classes.
Different asset classes.
So if one thing goes bad.
If one thing goes bad.
You're not,
You're not completely wiped out.
You're not totally wiped out.
Right. Don't put all your eggs in one basket.
You don't put all your eggs in one basket.
Why?
All right. But even with the risk limits.
Right.
Even with diversification.
Yeah.
The psychological side.
I think it's a challenge.
Can still be tough.
It is.
Right.
It is.
Like, how do you actually stay calm?
Right.
when you're facing those potential losses.
Yeah, that's where having that well-defined trading plan.
Okay, so we're back to the trading plan.
And understanding your risk tolerance.
So it's about
having that discipline.
The discipline.
To stick to your plan.
Yeah, to stick to the plan even when you're feeling the pressure.
Even when you're feeling that pressure.
Right. Yep.
Right?
Yeah.
And this is where the concept of stop-loss orders comes in.
Stop-loss orders.
Pardo describes them as a vital tool for damage control.
Damage control. All right, so it's like having an emergency brake.
An emergency brake.
On your trading, right.
On your trading.
You can just automatically get out.
You can automatically, it's a certain level.
If it hits a certain level.
Right, a predetermined level.
Predetermined loss level.
Okay.
Exactly. So you take
stop-loss orders can help you.
Emotion out of the equation.
Take the emotion out of the equation.
Yeah, you're not just reacting.
And ensure that you exit a trade.
To the, oh my God.
Before those losses get out of hand.
Before the losses get out of hand.
Exactly.
That's good. That's good.
It's a good way to.
A good safeguard.
Safeguard your capital.
All right, now as we wrap up this part of our deep dive.
Okay.
Anything else stand out to you?
One thing that really stuck with me is Pardo's emphasis on the constant evolution of markets.
Right.
He argues that even a strategy that's been rigorously tested and optimized can become less effective as market conditions change.
So it's not set it and forget it.
It's not a set it and forget
It's not set it and forget it
kind of situation.
You got to stay vigilant.
Markets are dynamic, constantly evolving.
Right.
What worked yesterday might not work today.
Yeah, that's a good point.
So traders need to stay vigilant.
Yeah, keep an eye on
their performance.
The performance, be ready to adapt.
And be ready to adapt when necessary.
Yeah, that makes sense.
It's about recognizing when a strategy needs tweaking. Or even a complete overhaul.
Overhaul, right. Pardo provides some great guidance on how to monitor
those key performance metrics.
Right.
Things like return on investment.
Okay, return on investment.
Maximum risk.
Maximum risk.
And how your real-time results compared to the
historical data.
Testing data.
It makes me think of those traders who just stubbornly cling to a failing strategy.
Yes, hoping it'll just magically.
They just think it's going to turn around.
Yeah,
but you got to know.
You got to know when to let go.
Let go.
Right.
It's just as crucial as knowing when to hold on.
Yeah.
It's about having the humility. To acknowledge
that something isn't working.
That it's not working.
In the discipline.
To make those tough decisions, even if it means abandoning a strategy that you spent a lot of time developing.
You put your heart and soul into it.
You did.
But it's just not working.
It's just not working.
Now, as we wrap up our deep dive into Pardo's book.
What's one takeaway you think every trader should internalize?
Okay.
Regardless of their experience level.
I think the most important thing Pardo emphasizes is that trading is just as much about psychology as it is about analysis.
Right.
It's about mastering that mental game.
The mental game.
Managing your emotions.
Managing emotions.
And having the discipline to stick to your plan.
Sticking to the plan.
Even when faced with challenges.
Yeah, even when it's tough.
Okay,
keep your head on straight.
It's about keeping a cool head.
Yeah.
Controlling those impulses.
Yeah,
not letting fear or greed.
Yeah, fear and greed.
Dictate your actions.
They can get you in trouble.
They can.
And that kind of mastery only comes with
experience.
Yeah.
Self-awareness.
Yeah, you got to know yourself.
And a commitment. To continuous learning.
Right. You're always learning.
You're always learning.
In the market.
In this game.
Well said. Well said.
Thank you.
I want to thank you for guiding us through this deep dive.
My pleasure.
Into the world of trading strategies.
Absolutely.
It's been incredibly insightful.
Thank you.
I think our listener is going to come away with a much deeper understanding.
I hope so.
Of what it actually takes to navigate these markets.
Me too.
Now, before we sign off.
Right.
I want to leave our listener with one final thought.
Okay.
We talked about the rise of these rocket scientists.
Yes.
Right?
We did.
The quants.
The quants.
Who use all the complex math and algorithms.
Yes.
To try and find an edge in the market.
Trying to find an edge.
This kind of begs the question.
Yeah.
What does the future hold for trading?
Right.
Will human traders become obsolete?
That's the question.
Or will there always be a place for intuition and experience?
Right.
I want to encourage
that is the question.
You to ponder that.
It is.
As you continue exploring. This wild world of trading.
It is a fascinating world.
It is. It is. All right. Until next time.
All right.
Happy trading.
And ensure that you exit a trade before those losses get out of hand.
Right. Right. They sound like an essential safety net.
They are.
Especially for those moments when, emotions might be clouding your judgment.
Absolutely.
Now, as we kind of wrap up our deep dive into Pardo's book,
okay,
one thing that really stuck with me is how he emphasizes this constant evolution of markets.
Right.
He argues that even a strategy that's been rigorously tested, optimized, can become less effective as market conditions change.
Absolutely. It's not a set it and forget it situation.
Right. It's not a set it and forget it.
Markets are dynamic.
They're constantly
evolving.
Yeah. What worked yesterday might not work today.
So traders need to stay vigilant, keep an eye on their strategy's performance.
They do.
Be ready to adapt when necessary. Absolutely. It's about recognizing when a strategy needs some tweaking.
Right. Or even like a complete overhaul.
Yeah. Pardo provides some great guidance on how to monitor those key performance metrics.
Right. So
things like return on investment.
Return on investment. Okay.
Maximum risk.
Maximum risk.
And how your real-time results compare to your historical testing data.
Right. So you're always kind of comparing.
You're always comparing.
What's happening now.
What's happening now.
Versus what happened in the past.
To what happened in the past.
To see if your strategy is still.
Make sure it's still valid.
Right. Yeah.
Right.
It makes me think of those traders who just, stubbornly cling to a failing strategy, hoping it'll just magically turn around.
They do.
But it sounds like recognizing when a strategy needs to be, abandoned.
It's important to recognize that.
Is just as crucial as knowing when to hold on.
It is.
It's about having the humility to acknowledge when something's not working.
Absolutely. And the discipline. To make those tough decisions.
To actually, pull the plug.
Even if it means abandoning a strategy you spent a lot of time on.
Right. You put your heart and soul into it.
But
it's just not working.
Sometimes it's just not working.
Now, as we wrap up our deep dive into Pardo's book, what's the one takeaway you think every trader, regardless of their experience level, should really internalize?
The most important thing Pardo emphasizes is that trading is just as much about psychology.
The psychology of it.
As it is about analysis.
Right.
It's about mastering that mental game.
Mastering the mental game.
Managing your emotions.
Managing emotions. Having the discipline.
Having that discipline.
To stick to the plan.
Even when it's tough.
Even when faced with challenges.
Right. You got to keep a cool head.
Not
let those emotions.
Control those impulses.
Run wild.
Not letting fear or greed. Fear and greed, they can get you in trouble.
They can dictate your actions.
That's for sure.
And that kind of mastery comes with...
It comes with experience, right?
Experience.
Self-awareness.
Knowing yourself. And a commitment.
And always a commitment to...
Continuous learning.
You're always learning.
Always learning.
In this game.
Well
said.
Thank you.
I want to thank you for guiding us through this deep dive.
My pleasure.
Into the world of trading strategies.
It's been fun.
It's been incredibly insightful.
Thank you.
I think our listeners are going to come away with a much deeper understanding.
I hope so.
Of what it actually takes to navigate these markets.
Me too.
Now, before we sign off, I want to leave our listener with one final thought.
Okay.
We talked about the rise of these rocket scientists, right?
We did, the quants. Right.
Using all the complex math, all the algorithms.
To
try and find an edge.
Trying to find that edge.
In the market.
Right.
It begs the question, what does the future hold for trading?
Right.
Will human traders become obsolete?
That's the question.
Or will there always be a place for intuition, experience?
Right.
I encourage you to ponder that as you continue to explore.
It is a fascinating world.
This crazy world of trading.
It is.
All right, until next time.
Hey.
Happy trading.